Why your fintech startup is dead before you even launch. Hello, fintech leaders and builders. Here is a scary number. 78% of fintech startups fail, and most of them don't die at Series A. They die before they even launch. Imagine this. You just raised $500,000. You hire your first dev team, and 6 months later, the money is gone. No customers, no traction, just a very expensive lesson. That's the nightmare I want you to avoid. And today I will show you the 5 silent killers that end fintech dreams before the first product even ships. The first killer is the one 90% of first-time founders completely ignore. I'm Vince Solo from INSART, Fintech Business Accelerator. We advance fintech businesses that redefine finance, expand digital freedom, and create long-term value. Our mission is simple: help fintech founders avoid the mistakes that end most fintech dreams, and instead build companies that last. The first killer is the easiest to miss and the hardest to recover from. Number 1, no customer discovery. I hear this all the time from founders. We don't need interviews, we already know what the market wants. That's founders speak for disaster. Here is what really happens. A team spends months coding, they polish the product, they launch, and then silence. CB Insights found that lack of market need is the #1 reason startups fail, and yet so many fintech founders still skip customer interviews. Investors put it bluntly: show me proof people will pay, or we're out. The fix? Talk to at least 20 potential buyers before writing a single line of code. Record what they say, get letters of intent. 20 short conversations are cheaper than burning half your seed round on code nobody uses. The next killer looks like smart engineering until it empties your bank account. Number 2, premature optimization. Here is a story. One startup built a futuristic microservices architecture. The engineers were proud, light years ahead of competition. The chief financial officer not so proud. They opened the AWS bill on Monday morning, $42,000, gone in one weekend, twice their monthly marketing budget, burnt on infrastructure for users they didn't even have yet. 78% of fintech failures see cost overruns as a key factor. This is exactly how it happens. Lesson: don't let your engineers build a Ferrari when all you need is a scooter to validate your idea. Focus on business value today, not some imagined future 10 years away. This one feels like momentum, but it's really chaos. Number 3, feature frenzy and tech debt. I have seen teams turn product development into a popularity contest. Product managers compete for who can pitch the coolest feature, and devs love building shiny things. The result: 14 half-baked features shipped in 6 weeks, but not a single stable release. Support tickets outnumbered paying users. Investors laughed on the outside but cried on the inside, and they held back the next funding tranche. Here is the truth. According to Stripe's developer coefficient report, more than half of engineering time in fintech is spent just servicing tech debt. That's death spiral if you don't manage it. The fix: balance new features with technical debt. A good rule: 30% of every sprint should go for paying technical debt, because if you don't, the debt will own you. Now let's talk about the killer that makes investors roll their eyes and close their checkbooks. Number 4, no written business model. This one shocks me. Founders walk into investor meetings with a flashy demo but zero numbers, no unit economics, no projections, no clear path to revenue. And I have literally heard investors say, if you can't show me how you make money, why should I give you mine? You don't need a 50-page spreadsheet, but you do need a simple, believable plan. One that shows how every dollar raised becomes $2 in revenue. Without it, your pitch is just theater. And finally, the killer that even great ideas can't survive. Number 5, the wrong team composition. Even with the right idea, the wrong team kills startups fast. Every fintech startup needs 3 core roles: a sales and domain expert to open doors and talk to customers, a product and UX lead to make sure you're solving real problems, and a technical lead to build a product that actually works. Miss one of these and your startup is flying with one wing. You might take off, but you will not stay in the air. The good news, every one of these killers can be avoided. Talk to customers before you code. Validate demand with letters of intent. Build only what sells. Balance features and technical depth. And assemble the right team from day one. At INSART, we call this the 0 to 1 playbook, helping founders go from idea to MVP to investor-ready traction. We've done it with companies like Advisor Engine and Salsa Labs, and we can help you. If you are a fintech founder and want your company to survive the 0 to 1 stage, hit the subscribe button now. Every week I will share survival tips to save you time, money, and sanity. And tell me in the comments which of these killers scares you the most in your own journey. Together, we can build fintech companies that last. Let's keep building together for brighter financial future. I am Vince Solo from INSART, and thank you for watching, and see you soon, and bye-bye.